The Dow Jones Industrials may be close to a seasonal low, and this could be more good news for the bulls. We'll take a look at the Dow Jones Industrials and other indicators, so stay tuned. We start right now. Thank you for watching. This is Richard with Wisdom Investor. It looks like we're getting close to a seasonal low for the Dow Jones Industrials. We're going to take a look at why we believe this here in just a moment. I want to thank you for joining us here. Stick with us for the entire episode. We have some real good information. If you have any comments, leave your comments. So let's get started here right now. Here's an 86-year seasonal chart for the Dow Jones Industrials. It's factored in for 86 years, typically what the Dow Jones does, and put into a one-year seasonal cycle pattern. July right here. So July in June right now. We're ready to hit a seasonal low area right before July. Matter of fact, around June 25th. Seasonal low pattern may be right around June 25th. Before we get into why we think the bulls may still be in charge, let's look at why we may be coming up to a seasonal low. Here's a daily chart of the Dow Jones Industrials. Now, the Dow has not made new highs like the NASDAQ. NASDAQ's kind of animal of its own, but we have charged up higher. We're still in this bearish island reversal. We have not filled that gap yet. And so we're moving sideways here. The next possible move would be down if the bearishness continues. We've had some selling pressure to the downside. We have increased volume to the downside. If we break below, say, 25,550, that would be negative for the Dow Jones Industrials. I'm not saying it's going to do that. Based on this pattern here, it very well could do that. If we break below 24,500, we very well come down to the next level of around 23,000. Now, that would be a lot of selling to come in. We could, over the next couple of days, as we said, a possibility around June 25th, that's in about 3 days from now, we could come down here and test these particular lows right here that we had about a week ago. I think that would be a more realistic thing. We have the holiday coming up, July 4th holiday. Typically, there's not heavy selling going into the 4th of July holiday. Matter of fact, the 4th of July holiday is typically bullish. Let's look at the top 5 stocks. Apple Computer here continues to hold up the stock market plus the Dow Jones Industrials, the NASDAQ, and many other areas. Continues to be a strong stock. Nothing bad you can say about Apple. United Health going sideways there. So that's a little bit of a selling pressure weakness for the Dow. Then we have Home Depot. Reached these highs. We've not been able to break out since. It would take some type of catalyst to get the market going again. Of course, it could be any kind of news at any time that would do that. We're looking at Goldman Sachs. The financials are holding the markets back a little bit, especially in the S&P 500. Financials have been moving lower as well as the Goldman Sachs. And McDonald's here has backed off from the highs, going flat. Hasn't really broken negative yet, but it's not helping the Dow at this point. Let's do a quick roundup of some of the other major index funds here. IWM small caps, again, had that island reversal, and it looks like it did fill the gap here on this gap up in the morning, but it did sell off. The IWM small cap sell off, that's going to be negative for the markets. S&P 500 also has that same formation, has the bearish island reversal, has not filled that gap yet. And we had some strong volume to the downside just last week. If we break below 3,050 on the S&P 500, that would be temporarily negative for the markets. Again, we said the NASDAQ 100 QQQ is still strong, still holding at the highs. Why would we think there's a possibility that we're going to go higher? Here's the message. U.S. banks are swimming in money as deposits increase by $2 trillion amid the coronavirus. There's just way too much money in saving. At a market top, typically everybody's bullish, and then there's a surprise to the downside. In this case, everybody's putting their money in savings. They know something's coming, and when everyone's looking for a drop, it just doesn't happen. So there's way too much cash here. Record $2 trillion surging cash has hit the deposit accounts of U.S. banks. So what we're looking at here is we have a 86-year cycle saying the Dow could hit a low around June 25th. Of course, that's not going to be the exact date and time, but that's an average over 86 years. The other side of things, the bullish side of things, there's a lot of cash here, and buyers are eventually going to come in and push this market higher if it's not high enough already. Let's look at the Dow Jones Industrial's trend indicator, starting to lean to the downside, but that's nothing serious at this moment. What is a little bit concerning is the number of stocks above the 200-day moving average dropped below the 40% level. I would consider that a little bit. So what we're looking for, possibly some weakness into this week, and then next week, going into the holiday, we may start higher again. Stay tuned for more. Thank you for watching. Leave a comment.